Good morning, good afternoon, good evening. Welcome back for another video. Today we're going to talk about Bitcoin and the huge opportunity that we have that we didn't have. We had all throughout 2017, but we didn't have at all at any point in 2021 or in early 2022. If you like this content, smash up the like button, subscribe to the channel, leave a comment in the comment section. But otherwise, let's go ahead and dive right in. Red day all around. It is what it is. Here's the reason why I am still a bull. I mean, why would I not be a bull? We are above the bull market support band, and we have a little bit of space between where we are and the top of the bull market support band. The 21-week EMA has crossed over the 20-week SMA. That's always a good sign. But look where we are. We are right there. We are hanging around the bull market support band, the 21-week EMA, the 20-week SMA. We got a little aggressive last week. Bitcoin did, at least, where the price rose off of all that Luna buying, trying to buy $10 billion worth of Bitcoin, realizing that it's a lot harder than it seems without driving the price up really high. So they've stopped over the last 6 days. They haven't bought any Bitcoin, but we went up to the 200-day simple moving average, and that was a logical place of rejection. And so now we're back down. We're in this range where Bitcoin is above its bull market support band. The next level of resistance, in my opinion, being that 200-day simple moving average. There's levels of resistance before above where we are right now. And so it is what it is. That's fine. And there are different scenarios, different ways that we can take this. We can make aggressive moves up and get rejected really hard, or we can do it slowly but surely and maybe, hopefully, see some new highs. And so what is this opportunity that I'm talking about? This opportunity, this thing that was a constant factor in 2017. Let's compare 2017 to 2021 and early 2022. So in 2017, if you can see on my screen here, that line right there at the very bottom of the screen is the bull market support band, these moving averages that I've been talking about for months. And if you can see in 2017, I know it's harder to see just because of how much the price of Bitcoin increased over a span of a year and a half. But in the summer of 2016, Bitcoin was around $675, and then, but it got a little high, bounced right back off the bull market support band, and then moved forward. And in December of 2016, rose a little bit, went back down, bounced off the bull market support band. The bull market support band was held as support. And in February of 2017, in June of 2017, in the fall of 2017, we just kept on rising and then going right back down, holding onto these moving averages. And that was a clean ride all the way up until we went parabolic and Bitcoin went too far gone. And Bitcoin went too far gone. And so what happened after that? Well, by the time we went back down to the bull market support band, there was plenty of fear in the market. There was so much fear that it was just like, there's no way those moving averages were going to hold. And so that kicked off about a year-long bear market until Bitcoin got down to its bear market bottom in December of 2017. And yeah, it was a bear market after that, but that was the bottom. That would have been a great place to buy Bitcoin. And you compare that to 2021 and it's an entirely different story. So again, aside from the COVID crash, we were kind of riding the bull market support band until about August, September. Around October of 2020, we started rising, and then we hung around this area, $20,000, the previous all-time high, for a few weeks. But then once we broke through that, it was off to the races. And then here, January of 2021, it seemed like we might have just hung around that area waiting for the moving averages to rise. And it seemed like we were going to treat the bull market support band as support. But then what happened in the end of February of 2021? Elon Musk did two things. Yeah, it's Elon again. Yes, of course. So Elon tweeted that he was kind of, he put on his profile hashtag Bitcoin, and everyone went crazy about that. And then in late February of 2021, he announced that Tesla had bought $1.5 billion worth of Bitcoin. And by that, when the reaction in the market for that, I mean, we had a $5,000 5-minute green candle after that. And that just sent us way too far. The 21-week EMA, the 20-week SMA, those moving averages, we were so far beyond those things that, again, just like at the end of 2017, we were too far gone. So then by the time we went back down to these moving averages again, there was too much fear in the market for those averages to hold, and we spent that summer in bear market territory, or whatever you want to call it, under the bull market support band, a mini bear market, whatever you want to call it. That's where we were, and we did that twice. We did it in the fall of 2021 a second time, and who knows? Maybe we could have had a parabolic move like in late 2017, but a few things didn't go in our favor. The Fed turning hawkish with those rising inflation rates, and the massive selling pressure coming out of China with Huobi and OKEX shutting down their mainland China operations. And so again, we had a quick drop and then right below the bull market support band again. So here's where we are now. We are in this point where we're just kind of hanging around. What if we could see some kind of move higher, but it's a slow and steady move higher, much like 2017? And like I said, we got rejected at the 200-day simple moving average. So let's just say the moving average, it's been pretty steady over the last several months. I mean, given all the craziness, but let's say that we can get the bull market support band a little higher, because the bull market support band is going to rise as long as we're above it, and we can see these moving averages meet, and then we can break through there. But not only that, but there's some pretty heavy resistance at certain fib levels coming up. So Bitcoin at $51,000, the 0.5 fib level, the 618 fib level at $55,000, the 702 at $58,000. If we can, here's how I think it could play out if we just want our quick gains now and we don't want to kind of ride along this, is that we could go up to the 618. Let's say we go up to the 618 in 2 weeks. 2 weeks from now, we're at $55,000. Well, here's what I think is going to happen. I think we're going to get rejected really hard there and then spend the summer back in the 30s, $45,000 range. We can go too far gone again, like we've done all throughout 2021. Too far gone above the bull market support band, too far gone below it, and we can do that again, get rejected really hard, because that is the exact point when a lot of people are going to be looking to offload and pack their bags and see you later, see you in 2024. So we can do that and then spend the summer between $30,000 and $45,000. And I've made a case over and over again that I do not believe we'll have a weekly close below the $30,000, the 1.618 Fibonacci retracement level from the previous cycle top. So we could do that. You want to do that? Or I would say this is the best case scenario. If we ride the 21-week EMA, the 20-week SMA, whichever one is above, which the 21-week EMA has crossed the 20-week SMA, we ride those, we move higher slowly but surely. And so then when we get to these resistance points, the 0.5, the 618, the 702, it's not that hard of a rejection because we have this level of support. And then perhaps, who knows, over a span of several months, we slowly but surely climb, we reach new all-time highs, and then we'll see. But guys, I have been, in early December, I remember the day, December 2nd, I turned from a bull to a crab. 2 days later, we had that hard liquidation event. We went under the bull market support band. Ever since then, I've been saying I'm not expecting anything extraordinary for the first half of 2022 or the summer of 2022, that if anything crazy happens, that I would expect, unfortunately, that would happen at the end of 2022 or early to mid 2023. After we didn't reach these new highs, reach six figures, and things turned pretty sharply because of everything I just talked about with China, with the Fed turning hawkish. To me, it just seemed like, all right, well, it's not going to happen for quite a while now. And so here's a possibility for those new highs to be reached is, all right, we tried being too far gone. We tried it twice. We couldn't get the momentum to break to this hysteria phase. And so now what do we do? Well, it seems like a lot of people are looking around like asking, yeah, what is next? Well, my preference, and I would say this is the best case scenario, is if we just ride this slowly and steadily to new highs. And then probably at some point after that, people will be excited, and who knows, maybe we'll see probably not the craziness of 2017, but some kind of excitement again in the system. Volume will pick up, but volume is low. Volume has been low since April of 2021. And so if volume is low, this is the best case scenario. We just keep on going a little higher, break through these levels, hold the moving averages as support, and then we'll see. But that would be better, in my opinion, than the craziness of what we've seen over the last 12 months, for sure. So as long as we are above the bull market support band, there's going to be a lot of opportunities with different cryptocurrencies. And I shared this on my Twitter account, and I'll share it again here. So I opened a short with Waves cryptocurrency. And really, listen, guys, I don't really know a ton about Waves. I was just looking at the fibs and I was seeing clear rejection at the 1.618 fib. It went crazy over the last few weeks, and logically that makes sense that Waves would get rejected at the 1.618 fib from its previous all-time high in May, drawn from that all-time high to the bottom in January, around where Bitcoin bottomed out. And I just saw that and I was like, that looks like a really clean place for a short. And if we've seen moves with Zilliqa, there's nothing really crazy looking at the fibs that I can point out, but there's going to be opportunities to make money on this on the way up and on the way down. Maybe it might be easier on the way down. You have a KuCoin account, you can open some shorts. That's what I did with Waves, and it's paying off very well. This thing's dropping pretty hard, and that's what I saw, that it just seemed like it would make sense. And so, hey, we see some parabolic moves. There's going to be some opportunities to, I don't want to call it a bet, but sure, to bet against those things. And so that's what I want to talk about. I want to dedicate some videos. I want to make a Waves video. I want to make a Zilliqa video. I very much want to talk about Luna. It looks like Luna is on its way up to this same fib level, the 1.618, and we'll see what happens after that. It's going to be hard to bet against Luna, but there may be an opportunity to open a short there. And, for any of you holding Luna, it's been a great ride. I personally have a hand, a little bit. I wish I had more for sure, but a little bit of Luna. So I'll be talking about that in another video. And again, man, it's so huge. Can we stay above these moving averages here? If we can, then the opportunities with alts are going to be phenomenal. Below the bull market support band, alts are going to bleed really hard. That's what happened in May. That's what happened in December, in January, and February. The alts bled really hard while Bitcoin was in a bear market territory, bear moment, whatever you want to call it. And so we'll see. But it would be awesome. Let's just ride the line. Let's ride these averages. Again, best case scenario. So that is all I have for today. I hope you have a wonderful rest of your day, a wonderful week. I will most certainly be seeing you in another video. Peace.